Hello everyone and welcome to TTT Markets. I am Fotis and today we are going to discuss trading near drawdown limits, the silent account killer. There is one situation in trading that quietly destroys more accounts than almost anything else. Not bad strategies, not lack of knowledge, but trading near drawdown limits. This is where many traders lose control, even if they were disciplined before. And the problem is, it doesn't feel dangerous at first. It feels like a situation you can manage. But in reality, it's one of the most unstable states a trader can be in. So in this video, we will break down why trading near drawdown limits is so dangerous, what actually happens psychologically, and how to manage it properly. So what happens near a drawdown limit? Let's define the situation. You've had a few losing trades, and now your account is close to the daily loss limit or the overall drawdown limit. At this point, everything changes, not on the chart, but in your mind. The goal is moving from follow the plan to avoid failing. This shift creates pressure, and pressure changes behavior. Let us take a look at the normal setup first. So this is the 4-hour chart on Euro USD. Let's discuss normal conditions, shall we? So assume you enter based on structure. We have an uptrend, you see VMAs, you see the structure of the overall market, you accept the risk, and you let the trade play out. Now imagine the exact same setup, but you are down 4% and your limit is 5. So what you do? Let me move this. You enter on pullback, okay, somewhere here near support, but you are down 4% overall, while your limit is 5%. Suddenly, you hesitate. You question the entry, or you take it with fear. Nothing on the chart changed. Everything is still the same, but only your risk context changed. So there are 3 common reactions here. When traders are near drawdown limits, they usually fall into these kind of behaviors. 1, over-aggression. They think, I need one good trade to recover. So let me take this trade. If I take this, I will recover. So what you do? You increase size, you take faster entries, or you ignore confirmation. And this is the fastest way to fail, because the risk is highest exactly when emotional control is lowest. Number 2, you see the trade. Let's assume you even have a higher target. This is a good trade and you don't take it. You freeze, you paralyze. So you miss good setups, you hesitate on entries, or you close the trade too early because you are scared. Because now every loss feels too expensive. You are thinking, I must not take this loss. Let me take a quick profit. Number 3, over trading. More trades, more attempts, more exposure. But this is increasing variance and makes failure more likely. So let's say then the market is changing structure. Let me magnify this. And we have a structure like this that is range bound. No clear direction, false breakouts, and low follow through. This is already a difficult environment. Now combine this with a drawdown pressure. This is where accounts collapse, because the market is unclear, the trader is emotional, and the risk is constrained. This is the worst possible combination. So here is the key idea. Trading near a drawdown limit compresses your decision quality. Normally, you might think clearly, but under pressure, imagine, as I said, 4% down and your limit is 5. Your decisions become faster. Your emotions become stronger. The rules become flexible. So even if your strategy is solid, as you can see here, the rules become flexible and your execution deteriorates exactly when it matters the most. There is an illusion of one trade fix, and this is one of the most dangerous thoughts. I just need one good trade. I will take this and that's it. My problems are gone. It sounds logical, but this doesn't happen, does it? You are not thinking probabilistically. You are thinking emotionally. And trading is not about this one trade. It is about many trades over time. Trying to fix everything in one moment usually creates bigger damage. Now let's take something like this. Assume we move to this state in the markets. We have a strong move to the downside, we have larger candles, and this is where traders near drawdown limits often act. They think this is the move I need, so they enter aggressively. But high volatility also means larger stop distances, faster reversals, higher uncertainty, so the risk is even greater. Professional traders treat this situation very differently. They don't try to recover quickly. They reduce pressure intentionally. So they might cut position size, stop trading for the day, or take a break completely. Because they understand something critical. The goal is not to recover immediately. The goal is to stay in the game. Good traders are not just aware of the market. So we might have a strong trend, we might have a choppy range, and we might have a strong up move like this. So good traders, they are aware of another thing. They are aware of their account state. They know when risk is normal. They know when pressure is increasing. They know when they are close to limits. And they adjust behavior accordingly, not emotionally, but structurally. So here is a simple rule. When you reach a certain drawdown level, for example, 50% of your max daily loss, you automatically reduce size by half, or you stop trading completely. No decision in the moment, no negotiation, because the decision is already made in advance. This protects you from emotional behavior. Look at the market over time. Let's move to daily. So what do you see? This is the market over time. This is Euro USD over time. There are trends, there are ranges, volatility changes. You do not need to win in every single phase. You need to survive them because your edge works over time, not in one moment. And survival depends on how you behave when pressure is the highest. What is the conclusion? That trading near drawdown limits is dangerous, not because of the market, but because of what it does to you. It changes your thinking, it changes your behavior, it increases emotional decisions. And that's why it silently destroys accounts. If you want to improve your trading, don't just focus on entries. Focus on how you behave under pressure. Because in trading, the moments that feel most urgent are often the moments where discipline matters the most. In trading, accounts are rarely destroyed by strategy. Remember this. They are destroyed by behavior under pressure.